Good morning, everyone. Thank you very much for joining us this morning for our BEE webinar. What Edson and I are going to take you through this morning is just the changes to the B-BBEE codes that essentially become effective on the 1st of December this year, so right around the corner. Before we go into the detail of the changes, I just wanted to chat to you a little bit around what some of our clients are experiencing. So what we are seeing is when our clients are being asked to tender for jobs, they are being required to have minimum levels of BEE compliance, and we've seen this with a number of clients who are doing work with Ericsson, Sasol, Old Mutual, and the Auditor General. This level of compliance, it could be any level, it could be just they're required to be compliant, but what we're finding that it's often a level 4 that they are required to be, which allows 100% of their spend to be counted towards the customer's procurement scorecard. In addition to this, they are also being asked for strategies or a roadmap as to how they're going to improve their scorecard going forward. So I think what this highlights for us is that BEE is not a quick fix that you can do the month before your year end. It's something that you need to be working towards, monitoring, strategizing, to make sure that you effectively meet what you need to meet in order to secure work. What we can also clearly see from this is the role of preferential procurement in the whole BEE space. The higher your level, the more your customer can count towards their procurement scorecard spend. If we look at the amendments that will be effective in December this year, we have seen a focus on 51% Black-owned organizations. We see this in that there are now additional points as well as enhanced recognition for procuring from entities that are more than 51% Black-owned. In addition to this, where ownership or where you procure from entities that are 51% Black-owned and 30% Black women-owned, that spend can be counted on 3 different levels within your procurement scorecard. Again, before we go into the detail of the changes, I just want to touch on a few key principles. And essentially one is the framework which governs the BEE environment. And essentially the legal framework is we have the B-BBEE Act, we have the Codes of Good Practice, and we have the various sector codes. Now, what you need to also remember is that compliant with BEE is not a requirement. It's not compulsory unless you're an organ of state or a public entity, or essentially you do business with these types of entities. They would normally require you to be BEE compliant before they will procure services from you. If we look at the current Codes of Good Practice, these were effective from the 1st of May 2015, and they relate to or are applicable to all entities that are verified after the 1st of May 2016, irrespective of what your financial period was. And the Codes of Good Practice also apply to all entities that are not governed by a specific sector code. And I suppose the determining factor on whether you fall within a sector code is how much turnover or revenue you derive from the particular sector. Normally, if you derive more than 50% of your revenue from a particular sector, you would fall to be verified within that sector. What you'll often find is that there are organizations who derive revenue from a number of different sectors. If it is unclear to you which particular sector you fall within, it is always important that you get clarification from your verification agency, the BEE Commission, or the DTI. if we have a look at there are 5 elements to your BEE scorecard. The first 2 being ownership and management control. Those are looked at by your verification agency on the day of your verification. So they measure that, and they look at that basically on the day that they do the site visit. If we look at the other 3 elements, which are skills development, enterprise and supplier development, and socioeconomic development, these are measured with reference to your financial year end. So any interventions that you need to do on these 3 elements have to be done within your financial year end. Now, if we have a look at the changes that have occurred on the 1st of April this year, so the 1st of April 2019, the Minister of Trade and Industry gazetted certain changes to the Codes of Good Practice. These changes effectively impact Statement 000, which are the general principles in terms of the codes. Statement 300, which is the skills development element. Statement 400, which is enterprise and supplier development. And then they've also given additional guidance in terms of interpretations and definitions. What is important to note is that these changes are effective 1 December 2019. What this means is that irrespective of what your financial year end is, if your verification occurs after 1 December this year, these revisions to the codes will be applicable to you. So if you haven't prepared for this, you may find you won't score optimally in these areas, which could result in you dropping, your score dropping, or you not meeting your compliance targets. If we look at the different sector codes, so the amendments that have been gazetted relate to the generic codes. If we look at the sector codes, the sector councils have been given until May 2020 to align with the amendments to the generic codes. And what we've seen is the tourism sector has already released draft amended codes for public comment. So comments on this close at the end of this month. And we anticipate that the other sectors will follow shortly. If we look at the next slide, what I've just done here is I've given you just a summary of the scorecard. If we look at in terms of the changes, so if we look at ownership, 25 points. The net value is where we have a priority element here, and that's measured on your day of verification. There've been no changes on the ownership element. Similarly, on management control, 19 points, again, no changes, and measured on the day of rating. This is not a priority element. If we then move down to skills development, enterprise and supplier development, again, these are priority elements and are measured during your financial year end. And we're going to deal in detail with the changes to these 2 elements as part of the rest of the webinar. And then if we look at socioeconomic development, which is 5 points, again, not a priority element, measured during the course of your financial year. And again, no changes have occurred to this element. So, I mean, the focus that we're going to have during the course of the rest of the webinar is on the skills development and enterprise and supplier development. I'm going to hand over to Edson now to take us through to the amendments to some of the general principles.
One of the key principles that have been gazetted under Statement 000 is the application of the flow-through principles to EMEs and QSCs. Firstly, you're going to look at the turnover threshold. In terms of an exempted micro enterprise, this is an entity with an annual turnover of less than 10 million under the amended Codes of Good Practice. This may differ if you fall within one of the sector codes. For example, if you fall within the tourism industry, the threshold is less than 5 million per annum. A qualifying small enterprise is an entity with a turnover between 10 million and 50 million under the amended Codes of Good Practice. Again, this may differ if you fall within one of the sector codes. For example, tourism has got a threshold of between 5 million to 45 million. The enhanced recognition for these type of organizations are available using the flow-through principle. For an EME and a QSC that is 100% black-owned, it qualifies for an elevation to a level 1 with 135% recognition of spend. An EME and a QSC that is at least 51% black-owned will qualify for elevation to level 2 with 125% recognition of spend. In terms of our compliance, these entities that I've mentioned above, they don't necessarily have to have a B certificate, but they can just complete this affidavit on annual basis, confirming the turnover, the level of our black ownership, or they can get a CIPC certificate. The flow-through principle basically entails this is a measurement of ownership through the chain of ownership to a natural black person. Another clarification that the DTI did provide on the changes to the Codes of Good Practice is the eligibility of a joint venture B certificate. In terms of these calculations will also apply to unincorporated joint venture agreement. The joint venture is required to compile a consolidated scorecard. They will use the respective score for two companies that will be weighted according to proportionate share in joint venture and added together for a combined score of out of 100. If an entity is an QSC, that is a qualifying small enterprise, it will use its B score out of 100 to calculate the consolidated score. For 51% EMEs and QSCs, they will qualify for a score of 95 points. 100% EMEs and qualifying small enterprises will qualify for total score of 100 points. EMEs that are less than 51% black-owned will qualify for 85 points. The joint venture BE certificate is valid for 12 months and is only applicable to a specific project. That is, let's say you are tendering for a specific project. The black ownership in respect of partners that are going to be incorporated on the JV may be flowed through to the JV in proportion to the respective JV partnership economic interest and voting rights as determined by the JV agreement. There have been also clarification in terms of the priority elements and the sub-minimum, particularly with regards to the skills development element and enterprise and supplier development element. In terms of ownership, a measured entity must achieve 40% of the net value, that is 40% of the 8 points available. And then on skills development, the measured entity must achieve 40% of the total weighting points, that is 40% of the 20 points available, excluding the bonus points. On enterprise and supplier development, a measured entity must achieve 40% in each of the categories set out within the enterprise and supplier development scorecard. That would be the preferential procurement, supplier development, and enterprise development.
Okay, if we now move on to the changes that have come about with respect to statement 300, which is the skills development element of the scorecard. In this particular area, there have been some significant changes, the most significant of which being the inclusion of a new indicator for bursaries for Black students at higher education institutions. So if we looked at the scorecard as it was previously, the indicator for skills development expenditure on learning programs specified in the learning program matrix for Black people as a percentage of the leviable amount has now reduced from the 8 points that we had previously to 6 points, and the compliance target has reduced from 6% to 3.5%. So if we look at what the leviable amount is, the leviable amount is essentially your annual payroll. So you're looking at 3.5% of your annual payroll that you would spend now on this element, as opposed to the 6% that you would have in based on the codes as they stand before the amendments. What they have then done is they've introduced a new indicator for bursaries. So under this new indicator, there are 4 points available, and the compliance is 2.5% of your livable amount. So again, 2.5% of your annual payroll. If you are a large entity, you would need to apply the demographic targets to your bursary spend. So what this means is that you would look at the economically active population and the targets that are set periodically for these. And if these targets stipulate that 30% of the population in South Africa should be Black African males, then you would need to target your bursary spend on 30% of your bursary spend on Black African males. Similarly, then you would look at the targets for females, Indian male and female, and colored male and female. And so you would have to split your spend in this manner. If you are a QSE, you would just look at the distinction between a black South African person or not. So that would be the distinction between a large and a QSE. It is important to note that there is a specification that it is only for bursaries for students at higher education institutions. So it's important to find out when you are granting a bursary, you need to check that the student is registered at an organization that is registered as a higher education institution. If we also look at the indicators, we can't double account for bursary spend and normal skill spend, so we can count it on either of the two levels, but not on both. If we look at also, in addition to the actual cost of the tuition, they have said to us that there are certain other recognizable expenses that we can include. And these include things like catering, traveling, and accommodation. The interesting thing here is they haven't put a limit on any of these particular categories. The other area that they have included is bursaries or stipends to people who are on bursary programs. So what we have done is we raised a question with the DTI in terms of what they would see as a stipend. Essentially, what they have said a stipend is essentially an amount that is paid to the bursary recipient, essentially to help sustain them. So if, for example, we had employed people who are on our bursary programs, they are saying that we won't be able to claim the full salary of those people. The areas where you can do your bursary spend, you could give bursaries to your staff, you could give bursaries to unemployed students, or you could source through an organization such as the Phoenix Trust, which is an online platform that assists students to raise funds for their studies. If we look at some of the other changes that have happened on the skills development element, the next significant one would be the removal of the distinction between employed and unemployed learners. So previously, there were 8 points available, 4 points for employed learners and 4 points for unemployed learners. If we look at the amendments, there are now 6 points available, but there's no longer a distinction between employed and unemployed learners. The cap on informal training has now also increased from 15% to 25%. If we look at the bonus points under the skills development element, these are available for absorption. Now, previously, these points were awarded if the learner was assisted with further learning, or alternatively, if you could secure a fixed term contract for at least a year for your learner, you would qualify for the absorption points. With the amendments, the definition of absorption has changed and is now restricted to securing a long-term contract of employment for the learner, intern, or apprenticeship. They've then gone on to define what a long-term contract is. And they define a long-term contract as a legal agreement between an individual and an entity that the individual will work for until his or her mandatory date of retirement. So essentially what this means is that either the learner, intern, or apprenticeship must secure permanent employment with your organization or the measured entity, or alternatively another organization before you can claim the absorption point. And what is important to note here is whether you employ the learner or the employee, or the learner is employed by another organization within industry, you need to be able to evidence that it is a long-term contract, in other words, a permanent contract. So that is quite important. And I think what is also important on all the amendments and all the requirements in terms of the skills development element is you need to have the evidence to support your claim. Okay, we're now going to move on to the changes with respect to the procurement element.
Preferential procurement is the drive force behind BE. So there have been some significant changes under the statement 400. In terms of preferential procurement, there have been some additional points. If a measured entity procure from a supplier that is at least 51% black-owned. If you look at the current scorecard, if a supplier a measured entity does spend with a supplier that is at least 51% black-owned, the total points is 9 points. However, the points have been increased to 11 points, and the compliance target has increased from 40% to 50%. The current scorecard does allow them 1.2%, 1.2 if you spend with the first-time suppliers. However, this was removed and replaced with enhanced recognition of 1.2 if you spend with a supplier that is at least 51% black-owned using the flow-through. Large procurement from large entities which are at least 51% black-owned on flow-through basis will also qualify as procurement from EMEs and or QSCs for a period of 5 years from the date on which a procurement from the measured entity occurs. This will only apply if the measured entity was an EME or a QSC when the measured entity first procured from them. There is now a definition of a designated group supplier, and then the amended codes just define the supplier as a supplier that is at least 51% black-owned by either unemployed black youth who are attending or waiting admission to attend an educational institution, or black youth that is between the age of 18 to 35, or black people with disabilities, or black people living in rural areas, or black military veterans. In terms of supplier development, enterprise development beneficiaries, there's now clear distinction who does qualify for enterprise development, does qualify as a supplier development beneficiary or enterprise development beneficiary. The supplier development beneficiary should be part of the measured end suppliers chain, and the enterprise development beneficiary should not be part of the enterprise development chain. Large entities that are at least 51% black-owned can now qualify as either supplier development beneficiaries or enterprise development beneficiaries if they are at least 51% black-owned. This will only apply if the measured entity was an 51% black-owned EME or a QSC when it first received assistance from the measured entity. Recognition for assistance to 51% black-owned entities will be limited to 5 years from the time when the beneficiary first received assistance from the measured entity.
So that essentially deals with most of the changes which will come into effect, or the bigger changes that will come into effect 1 December 2019. What I'm just going to cover briefly now is an overview of the Y.E.S Initiative, the Youth Employment Services Initiative. Now, essentially, this initiative was gazetted on the 28th of August 2018. And I think what's important to note here is that this is in addition to your normal skills development spend. So you would still, all the things that I've chatted about previously in terms of the skills development scorecard, and in fact, any other elements of the scorecard, you would do as normal. And then if you wish to participate in the Y.E.S Initiative, that would then be in addition to this. In order to participate, you need to register with the Y.E.S nonprofit company, but there are certain qualifying criteria that you would need to qualify. If you are a large enterprise, you would need to meet your subminimums on the priority elements. So that would be the ownership, the skills development, and the enterprise and supplier development, the three different aspects of that. Or alternatively, if you don't meet the 40% subminimum on each of the priority elements, you need to have at minimum an average of 50% across all three of the priority elements. So that would then be for large enterprises. If we're looking at a qualifying small enterprise, so for a qualifying small enterprise, you would need to meet the 40% subminimum on 2 of the 3 priority elements, and ownership being one of those, and an average of 50%, or alternatively, if you aren't meeting the 40% subminimum, you would need to meet an average of 50% across 2 of the 3 priority elements. If you are an exempt micro enterprise, there is no minimum requirement. So once it's been established that you qualify to participate, there are certain targets that you would then need to meet. So if we look at these targets, and what I must stress here is that it's the highest of the 3 targets. So when you're looking at what your target is, you would need to do all 3 calculations, and the highest of the 3 calculations would be what your target would be. So these targets are 1.5% of your headcount in your preceding financial year, or 1.5% of your net profit after tax from South African operations in the immediately preceding 3 years. And this is then converted into a headcount by dividing that net profit after tax by 55,000. Or alternatively, it would be the target as determined in Table 1. Now, Table 1 was included in the Gazette. So you would look at the 3 calculations, whichever is the highest would be your target. So what is the implication or the benefit from a BEE perspective if you are able to participate in the Y.E.S Initiative and meet your compliance targets? So if we look at your BEE recognition, if you achieve your Y.E.S targets and you're able to absorb 2.5% of your Y.E.S candidates, you would then move up 1 BEE level on your scorecard. So if you're a level 4, you would then move up to a level 3. If you achieve 1.5 times your Y.E.S target and 5% absorption, you would also move up 1 level on your BEE scorecard, but in addition to that, you would get 3 bonus points added to your scorecard. If you are able to double your Y.E.S target and achieve a 5% absorption of your Y.E.S candidates, you would then move up 2 levels on your BEE scorecard. So you would then, for example, if you are a level 4, you would then move up 2 levels to a level 2. So that essentially just gives a brief summary of the Y.E.S Initiative, and also the amendments to the codes. I think that's basically all we have time for this morning. But if you do need any assistance or have any questions, please feel free to email either Edson or myself. Thank you for the time that you've spent with us this morning.